Welcome to our Forex and CFD Market Focus Report for Thursday, September 12, 2013. Let's go ahead and take a look at the calendar today. Earlier today, our biggest event was the interest rate decision from Reserve Bank of New Zealand. The RBNZ decided to keep interest rates unchanged, but they moved the market by indicating that the next move higher in interest rates will likely take place sometime soon, probably next year. So in the past week, we have had the Reserve Bank of Australia and the Reserve Bank of New Zealand indicate that interest rates probably have seen a floor. Overnight, we saw consumer inflation expectations released in Australia. That, of course, was far below expectations and far below the previous 2.3%. The Australian dollar moved lower, as we'll see, as a result of this print. We also had very, very weak employment numbers in Australia, whereas 10,000 new jobs were expected to be created. More than 10,000 jobs were lost, and the unemployment rate actually moved higher to 5.8%. You may recall the RBA has indicated unemployment rate will probably reach 6.5 or 6.75% over the forthcoming quarter. So the weak employment and labor market data in Australia is not helping the Australian dollar's cause. On that note, we can also see the participation rate reached a 5 or 6 year low in Australia. In Germany, we saw the wholesale price index come out. It actually moved lower on a month-over-month and year-over-year basis. This suggests that there is not much inflation at factory gates and at the PPI level in Germany, and that should help to keep interest rates lower in the Eurozone as a result. The European Central Bank today published its monthly report reiterating that interest rates will remain low for quite some time, and they indicated that improving confidence measures throughout the Eurozone indicate that economic growth will continue to expand modestly. We have remarks today in the UK Parliament from Bank of England officials, including Carney. We're going to pay very close attention to those because Carney and the MPC have recently provided forward guidance indicating that UK interest rates will likely not move higher until the unemployment rate moves lower to 7.0%, something that the Bank of England does not anticipate for at least 3 years. We saw some very weak industrial production data here released in the Eurozone. That, of course, is not helping the Euro's cause. And in the U.S. today, we will receive jobless claims data and also continuing claims data. We're also in Canada going to see housing price data come out today, house price inflation. This will be very important because the Canadian dollar has recently been reversing its weakness we've seen over the past several weeks. We'll see if the Canadian dollar can resume its upward trajectory as a result of these data. Let's go ahead and take a look at some other asset classes today. Here we have the metals complex. This is the chart of gold. We can see gold continues to move lower here on our chart. It's trading right now around 1342 per ounce. This is a level we have not seen since August 15th or so. The gold price continues to take its cues mostly from events in Syria. At this point in time, it does not look like there will be any sort of U.S. military action against Syria. The U.S. and Russia are meeting today in probably Geneva to discuss disarmament of Syrian chemical weapons facilities. It's much a similar story here on the silver against the U.S. dollar chart, although the move lower in silver appears to be less acute than we have seen in the gold chart. Silver, of course, reaching its lowest levels since the 21st or 22nd of August. We would anticipate additional weakness in the metals crosses if the prospect of military action in Syria appears muted. Moving over to another asset class, the energy asset class, we see higher West Texas Intermediate futures here. They are now trading right around the 107.67 area. This is the second consecutive day of increases for this particular asset. We saw yesterday some U.S. data indicate that inventories continue to fall in that country, and the price accordingly is moving higher on the prospect that the U.S. will need to add reserves. Of course, the U.S. is the world's largest consumer of crude oil. Over here, much the same story with Brent futures. Brent futures are now trading at 100.96, moving ahead for the second consecutive day. We'll go ahead and see soon if they can hold a move above 111 area, and then possibly tackle other important technical resistance areas that are coming in right around 1260 and 1270. Let's go ahead and take a look at some FX action, some Forex action here. This is our US dollar daily activity index. We can see it's right around the blue zero line, indicating not much in the way of an intraday trend for the US dollar. Over here on the Euro activity index, we can see the Euro has a downward trend today, mostly on account of that weaker industrial production data we saw, also the weak German wholesale price data, and of course the ECB remained dovish in their September monthly report. Here we see a nice break higher in the Japanese yen daily activity index. In fact, the Japanese yen daily activity index has not been this strong, as we can just see. Has not been this strong since the month of August, the late August. So for 2 weeks, the daily activity index has not been this strong. We'll take a look at some of our cross rates in just a moment. Here we see the British pound. Of course, the pound is weaker today on its daily activity index, probably in anticipation of fairly benign comments expected out of the MPC in the Parliament there today in London. We anticipate they're going to reiterate that interest rates will be on hold. Moving over to the Swiss franc, we see not much of an intraday trend here, kind of hugging that zero blue horizontal line there, although it is slightly negative on the day. We are very surprised, perhaps, by the move lower in the Australian dollar. Yesterday we had better than expected Australian numbers, and the Australian dollar, of course, failed to gain much traction. Today we saw, of course, some very weak Australian labor data, employment data, etc. Also consumer inflation expectations, and accordingly we've seen a dramatic move lower in the Australian dollar daily activity index. It has not been this weak since July 31st. So we'll go ahead and take a look at the Australian dollar on a chart here in a moment. Here we have the Canadian dollar activity index. Again, it's below zero there, although not much of a trend. It's recently been above zero, trending higher. We'll go ahead and, as we said, see the Canadian dollar home price inflation data later in the U.S. session, and we'll see if the Canadian dollar can recover. Finally, of course, we have the New Zealand dollar daily activity index. We indicated RBNZ left interest rates unchanged at 2.5%, but indicated the next move higher in rates is expected probably sometime next year. In fact, the markets anticipate that the rates will change by about 90 basis points higher, 95 basis points higher over the next 12 months. Interestingly, Reserve Bank of Governor Wheeler specifically targeted the U.S. dollar today in his verbal intervention after the RBNZ meeting. Wheeler said he hopes for a stronger U.S. dollar and a weaker Canadian dollar. Obviously, the RBNZ is hoping the markets take care of some of its policy work for it. But at any rate, we would anticipate additional policy tools being used by RBNZ. The prospect of successful actual FX intervention by RBNZ is quite low, and that's why we anticipate continued verbal intervention by Wheeler. Let's go ahead and take a look at some of our currency pairs here today. This is a daily chart of the euro against the Japanese yen. We can see the euro is trading right around this purple 23.6 retracement line of a recent range. This coming in right around 132.08. A break lower, and we would anticipate a test of our next major support line, which is coming in right around 131.71. That is this red horizontal line here. Looking at the US dollar against the Canadian dollar, we saw, of course, a couple days ago a break of this yellow uptrend line, and then, of course, yesterday's intraday high was right around the that intraday trend line, or multi-day intraday trend line coming up. We, of course, today see the dollar CAD trading right around a couple key support lines. One coming in right around 103.19 and another one coming in right around 103.10. These are long-term support lines dating from May of this year. A move lower, and we would anticipate a test of this 102.40 area down here, and a move higher, we would anticipate a test of this 103.67, 103.80 area up here. We'll go over to the New Zealand dollar. We saw a significant gap higher, which is quite unusual for an intra-week move. We usually anticipate a gap like that during the weekend. But we saw that, of course, traders, of course, were buying Kiwi and selling US dollars ahead of that interest rate decision from RBNZ. Our next upside target for the pair is the 81.78 area, which is this red horizontal line here. We have the blue down arrow to indicate it as well. Let's also take note that the move yesterday actually crossed this yellow downtrend line. So we'll see if the Canadian dollar can continue its move higher. Our next upside target, of course, is this 82.95 area, as designated by this red horizontal line here. We next have the Australian dollar, US dollar on tap. We have an outside bar here already through the European session in the Australian dollar. We saw, of course, a brief move above this Fibonacci extension level, which is 93.37. And then we saw the Australian dollar try to find some support right now, right around the 92.51 area. A further move lower, we would anticipate a test of this 91.81 support area, and then any additional support would come in around maybe 91.11 if we see additional weakness in the Aussie. If it recovers, we would anticipate the Aussie dollar would test perhaps this 94.77 area, and then this 95.09 area is a wider resistance area. Let's go ahead and take a look at one of our favorite crosses. This is the British pound against the Swiss franc. We chose this cross rate to today for a couple reasons. Number one, it is trading right around this 50% retracement level of a very wide range dating to July of 2012. So the July 2012 high coming down to the March 2013 low, 50% retracement coming in right around 147.11, and that is in fact right where we are trading right now. Our blue Fibonacci extension levels here we have drawn, and we would anticipate that any move higher, we're going to try and test this 148.34 area in the cross rate here. Above that, maybe 50 points higher, let's call it. Let's look for a test of 148.88, followed by a possible test of this 150.33 area up here. Finally, we want to spotlight one final cross. This is the, again, we take a look at the Australian dollar. On these other Fibonacci lines that we drew, we can see that today's intraday high actually corresponds to this 50% retracement level of the Fibonacci extension area. So what we saw here is, in fact, the Australian dollar not being able to move above this key resistance area. And as we saw here earlier, that is why we saw the sell-off earlier on the back of the weaker Australian employment numbers and consumer inflation expectations. Thank you very much for watching our video today.